Hello guys, welcome to the Train Parrot. This is not the first attempt that we have on 71.5. And in my opinion, crossing above 71.5 and holding there is the difference between continuing in this ranging period that has been extremely boring or potentially entering into the next stage of the bull rally. In this video, I'm going to show you some important information, all in regards to this potential continuation. As usual, we are going to cover from both perspectives. In this channel, we always put all the information on the table so you can take better informed decisions. Guys, if this is the kind of content that you like to watch, make sure that you're subscribed to the channel, hit the notification bell, and if you feel like supporting the channel, make sure you watch the video until the very end and do not go anywhere without leaving a comment down below. That's really helping the channel to continue growing. Here it is, the weekly. Very important chart. This looks almost like a V recovery. That's all subject to not seeing another rejection at 71.5. Because as you can see, that's been the toughest level for the weekly to overcome. A rejection at this level puts in a double top. Let's face it. That's of course as long as we get rejected at 71.5 and we don't manage to hold the low of 61. Because if you do that, then you get your M pattern completely formed, and then people are going to be looking into shorting this level. In terms of divergences on the daily, we continue accumulating divergences, almost as many as we had on the 20th of May, where we saw a pullback of around 8%. Divergences don't guarantee that the price reverse, but contribute as a strong push for the price to start reversing, or at the very least to go sideways for a little bit. For all the bulls out there, this is probably one of the most reliable signals. The hash ribbons prints first a capitulation, then there is an area of recovery, and eventually you get the buy signal. Typically after a buy signal, whether on the daily or the weekly time frame, you see strong uptrend, because that means that miners are in recovery mode. For example, here last year mid-August we have a buy, and right after that we saw a drawdown of 15%. Yes, of course, after that there was a massive push of 143% from the time it print the buy. So I guess you can tolerate 15% down if you're gonna do such a big rally. We have another buy here, but that was a bit late because we already have a big run at that point. Then there was some sideways, and then they continue running up to giving a 46% in profits. So looking back in time, you're going to see that almost 99% of the signals have an upside upcoming, even though there can be some drawdown. I will expect people in a bull run to consider even the capitulation a time for entering the market and taking a bit more risk, assuming that in a time frame of within a month or two, there should be a buy signal and a subsequent push to the upside. So if you're an aggressive trader, probably you want to be considering this signal already as an early buy. Many people are starting to consider this shape that we have here as an inverse head and shoulders with this neck placed there. I'm going to show you later how this pattern looks on the weekly. I think that's probably the most bullish pattern that we are seeing on the daily right now. Of course, to consider the pattern valid, we need to wait until the price breaks above 71.5. We got also an inverted head and shoulders from the Greed and Fear Index. We talked about this about a month ago. When we were at 56, I told you that we might complete the head and shoulders aiming for the higher 80s. And surprise, surprise, today we are at 78, so we could say we are halfway through to that potential target. Today is the first day that we are in extreme greed. And the CME gap is still there laughing at us at 68.3. Whether the price is going to come in the short term and take it and then reverse quickly to the upside, that's completely impossible to tell. But all we can say is that CME gaps tend to get filled more than 90% of the time. And let's have a look at the daily, because I think on the daily there's a few patterns that are extremely important to keep in consideration. We have the big flag here that we broke out. We came for a long period of retests here on the daily, and we broke out from the mini flag as well, and we managed to reach the top of that flag. In theory, everything is ready to hit our first bullish target. As long as we continue breaking and holding above 71.5, 77 should be just around the corner. Now, to give you my full, complete perspective, which usually doesn't have a specific bias, I normally try to share both sides of the picture. The last time that we have a trend line supporting the RSI on the daily when things were very bullish, it looked like this, and we have a breakdown below that dotted white line supporting the momentum, and then we retested from the bottom, and right after we did that, we have the largest move down. So in other words, breakdown, retest, and then large move down. So where are we right now? Well, first of all, we haven't got that high as we did in this moment, which means that relative to 73K being very close to that point, we are at a lower RSI. So still not official, but we are putting loads of bearish divergences. This can still happen when the price succeeds going higher, but is bearish pressure against the current situation. Second, the breakdown from here was at a level of 78, so that means that the market was extremely extended here. It got too bullish, and we broke at that point at 78. Whereas in this bullish move that we are doing currently, we already got exhausted at 57. That's almost 30 points in the RSI lower than when we were going to 73. And this reflects momentum. So that means momentum got exhausted way earlier. Point number one. Point number two, we have a mini breakout bullish here. But now we are coming to the bottom of the channel just like we did in here. So we are coming from below the channel and touching it and testing it as a resistance. Can we break above it? Yes, but it's not a 50-50% chances. The chances are reduced when you're facing resistance. And they are also reduced because we broke down quite early, to be honest. So if you look at this pattern, you see a long sell to the downside and then halfway to the upside and already breaking down and retesting this as resistance. Keep these things in mind. This is not the only thing I will take in consideration to sell, but it's also something that I will never ignore. On the 4-hour, I can see this a lot more clear. We have the breakdown, we have a test here, we built some base, and we have this bullish breakout. But currently, this line in yellow is the resistance that we are also facing on the daily. So we are trapped below this yellow line as resistance and this white line as support on the 4-hour. I will say if we break below this line right now, we might delay testing once again the 71.5K. If we hold it, we might make another attempt to touch the yellow line. One interesting point is that if the RSI made it to the top here and tested that yellow trendline resistance, that will take us to 73 once again. So what is currently pushing the price higher? The answer is very simple. Pretty much 2 consecutive days of massive buys coming from the spot Bitcoin ETFs. You can see here these 2 spikes. One day is almost 1,886,000,000 and the second day is 488. That's insane. We haven't had this sort of candles since around March, which means that we are not necessarily slowing down in the flows from the ETFs. On the 6-month chart, you can see that 2017 became support of the bottom of the bear market that we finished in 2022. After that, we are having 3 consecutive green candles. We are overlapping with the wicks that we see here in 2021, just like we did the overlap with 2017. So in theory, after overlapping with this, we should have at least 1 or 2 more candles that expand to the upside. And those are 6-month candles. Now, let's review the 2-month chart that went viral a few months ago on Twitter, just because of this very bearish candle that we have here. You can see that the current 2-month candle that has 24 days to close has almost already completed reverting the damage made during the previous candle. And if we look at the 3-month, this looks extremely bullish. And that proves my point that looking at too many time frames can become really confusing. Whereas the 2-month candle left us completely in panic mode seeing this at the top. If we were to close the 3-month candle right here, this will be one of the most bullish candles that you can have here, which means that all this selling pressure was just a liquidity grab to continue to the upside with a massive upcoming green candle in the next 3 months. This candle, we have 24 days to hopefully close in this way. But again, do not look into too many time frames at the same time, because you're going to find that they might contradict with each other and you're going to get more confused. The price is confronting the daily and the 4-hour resistance. We're seeing lots of sell signals at the same time. That is okay. Sometimes you see these sell signals, the technicals just go nuts, and then the price continues going higher, especially if the price is driven by ETF buying massive amounts like 800 million, which is crazy. On the weekly, we seem to be on the way to complete the inverse head and shoulders pattern as well. As you can see, this live candle is above the neckline at 71, and I told you, if we close this week with an RSI weekly above 70, that is a massive, massive bullish signal for the weekly. Anything can happen on the daily, on the 4-hour, there can be pullbacks, but the weekly signaling above 70 means that this party hasn't finished yet. At the same time, the stochastic RSI on the weekly is kind of open the mouth once again. A couple of days ago, it was about to close the mouth, which is a bearish crossover. We don't want to get that. Big wells depositing into exchanges have massively slowed down. The ratio is still at 1.5, but we can see in the sources that things are cooling down from all these wells. Unfortunately, we are not seeing many withdrawals, at least from this source, into the block. Right after we have this big inflow, the next inflows are considerably less, continuing with this trend of slowing down in the inflows. The shorts are doing every single thing that is possible to keep the price below 71.5. And one of the reasons that this could be is because there are massive liquidations above 73K. I told you, we close above 71.5, and that's all we need to have a 99% chances that we ignite a short squeeze that can span to higher targets. The best way to show you that they're panicking is all the selling pressure at 71.5. I bet that there are massive interests from them into keeping the price there, because there's big pain if things continue going higher. One thing that I'm noticing today is that the large wells, the 1 million to 10 million, in FAR charts are showing a selling, and the same with the 100K to 1 million. But this is a weekly chart, so let's see how that's going to play out. The order book on Trading Light is showing that most of the liquidity is on the upside, and this is the wall to protect the price from not going beyond, particularly the level of 73.2 and 72, a lot of liquidity. We can see that if we reduce the brightness, that is the most packed level, and the one immediately next to the price, it seems to be reducing from 1K liquidity down to 682. This means that they are losing their confidence that the price is going to hold at 72K. In other words, they're chickening out their short positions. You can see that most of the liquidations that we have had since the 4th of June are shorts. And every time that they get liquidated, the open interest comes down and then they re-enter. Right now, the net longs versus shorts delta in this indicator is showing that we have more longs as well. Guys, if you want to trade Bitcoin or altcoins in a decent setup, consider joining OKX. That's my favorite exchange, and they're currently offering, if you use the link in the description, 60,000 price pool. And if you don't want to do KYC, have a look at my BingX link in the description as well, with 6,000 in rewards. And yes, guys, we are back to Bitcoin season, at least for today. We are at a level of 22 in the index. This means that there's a lot of coins that are underperforming Bitcoin. Bitcoin is at this level here in the past 90 days. There's only a few handful of altcoins that are currently showing higher returns than Bitcoin. The market has been going sideways, and many altcoins have been bleeding during that period. Bitcoin is showing 4.4% in the last 90 days, which is pretty much sideways, and the winner of the last 90 days currently is Ton with 144%, followed by Pepe. So there's plenty of meme coins, as you will expect. That has been the biggest winner narrative during these conditions of the market. I have some great news for bot traders. I learned directly from the CEO of LunarCrush that all LunarCrush information is available for free on TradingView. This means that you can use the Alt Rank, Galaxy Score, and any of their metrics to backtest using PineScript. For example, if you want to find the symbol for Alt Rank of Solana, you just write down the symbol Sol_Alt Rank. Using that as a data source and converting it into a signal can be used for real-time signals coming directly from alerts on TradingView, which can be fully backtested. So that is blowing my mind that that has become available for free. And I'm guessing I'm going to spend some time using that data to come up with some new interesting signals and bots. So make sure that you're subscribed to the channel, and I'll see you on the next one. Take care. Bye-bye.